A report has come out, it came out on Friday from the Bank for International Settlements. They wrote a paper that looked at CBDCs and their relationship with developing countries. And their findings in the paper said that although stablecoins may be adopted in some of these markets, they may also present wider challenges, have not been tested at a large scale. So the authors of the report, they also said in it, stablecoin arrangements aspire to improve financial inclusion and cross-border remittances, but they are neither necessary nor sufficient to meet these policy goals. So an interesting report there that kind of digs into CBDCs. I know we dig into them a lot on this show anyway. David, I'm going to throw this straight to you for your takes. What were your thoughts on the Bank of International Settlements findings?
Yeah, kind of limited. I feel like we might be missing some nuance there in the length of the report. But first, I would say it's interesting and not good that they lump stablecoins and CBDCs in together. Those are not the same thing. They are, in fact, not even particularly related. And it really does. I wonder what they mean. The part that I pegged to was they said that they are not, important alternatives to existing digital banking tools or something to that effect. And it makes me think they don't understand what they're talking about, because a stablecoin, as much as I am a critic of a lot of stablecoins in terms of their capitalization in particular, a stablecoin does definitely provide access that standard, even like apps can't. I mean, it's so much easier to get access to those things and to use them. So I don't necessarily have a takeaway, except that I don't really understand their point, I guguess. So that's where I'm at with this.
Yeah, just to add on to that, I had a very similar take, especially when they say that, the conflation between stablecoins and CBDCs was a big issue. But when they say that they're looking at central bank digital currencies to address weaknesses in their financial system, I mean, when people start bringing up questions like that, I have to ask, which weaknesses, and how would CBDCs help this? Because CBDCs really, they're just a centralized internal ledger for these governments.
They're a replacement for SWIFT, and that's about it.
Yeah, exactly. So if you're talking about a lot of these developing countries, they have corrupt governments or whatever, and so maybe we could have CBDCs as a way to change the money supply or whatever. It's like you still have the underlying issue. It's all controlled by these central powers. How is it any different from the digital currencies that they may be issuing already? And when I say digital currencies, I mean that most of the transactions we do day to day are not in, tangible, physical, holdable assets. It's all ones and zeros of computers. So I often just ask the question, how is this CBDC going to be any different from the current system? But Zach, I'll throw it to you for your takes.
Yeah, I mean, we're also expecting, sometime soon, much more words on this out of the U.S. government. So I think the idea here that is interesting to me is that stablecoins are suddenly being taken much more seriously than they had been in the past, right? These are sort of a novelty that were being used by crypto traders to hold assets without exiting back to the traditional financial system. I think clearly right now we're seeing use cases starting to emerge where these are something that people use in their everyday lives, right? Whether it's sending remittances on the Stellar network with USDC, whether it's transacting with the Paxos stablecoin through the Novi wallet, by way of Facebook, right? All of a sudden, we're starting to see potential consumer applications around stablecoins and around earning interest on those stablecoin deposits starting to pick up steam. And as such, they're starting to attract far more scrutiny from regulators, both overseas and here in the US. So to me, this is another signal in that story. That's an emerging narrative that we're going to be watching closely. As stablecoins kind of grow up, they're going to face some tough questions from regulators who want to figure out whether A, they're systemically risky to the levers that they're able to pull as it relates to fiscal policy, and B, how do they comport with the existing financial regulatory structure? So that to me is what stands out here. But I'm very curious for your thoughts, Naomi. I'm going to toss it back to you.
I think Jen wanted to chime in.
Oh, Jen, I'll throw it to you. You are looking wonderful in the studio. So give us your studio take.
Thank you. I just want to add that the global remittance market size is valued at $16.2 billion US, and that's from 2020. And the market is it's very slow and clunky, and we need innovation in the space. And just, David, I wanted to point to the quote that I think you were referencing from the report. They said they questioned whether stablecoins could offer lasting competitive advantages over rapidly developing, evolving digital payment services like digital ID, e-money, and mobile banking. And so it just feels to me like this is just another case of a traditional institution that's been around for a long time that's trying to poke holes into innovation because it wasn't in their roadmap. And it's really saddening for the people who need the innovation, right? The people who are sending this $16.2 billion of remittances back to countries where their friends and family can access money, and they need to do so in a cheap and effective way. And so it was upsetting, but Naomi, I'll pass it back to you.
Yeah, just exactly on that point, Jen. I mean, this is a Switzerland-based institution. It's 91 years old. I think you're absolutely right that all these innovations were not in their roadmap. They're not quite sure how to factor them all in. And is an organization whose entire purpose is basically to support central banks' efforts to create banking and financial stability, through research and fostering cooperation with central banks on a range of issues. Like, their focus is all on the central banks. So it's interesting that they're talking about CBDCs, like central bank digital currencies, this is our purview, but then they're throwing stablecoins into there. I mean, it was interesting to me that they're kind of painting it all with the same brush. I would have thought that they'd be a lot more positive towards CBDCs, considering that their whole purpose is to kind of foster innovation in that direction with central banks. But I wouldn't be surprised if they just start putting out more reports that are against stablecoins in particular, which are a big threat to central banks and to their potential central bank digital currencies. But we'll find out where this goes. At the moment, it's just a bunch of reports that tend to be very vacuous and not say too much.